So you have $1,000 in your account and you want to grow it. First off, congratulations on saving that amount. Many people can't even manage to save that much these days. If you have $1,000 and want to significantly increase it, then investing is the ultimate secret to building wealth. However, it entirely depends on whether those $1,000 are all you plan to invest, or if you have $1,000 now and expect to regularly have more in the future. Let's start with the first scenario, where you only have $1,000 to invest and that's it. This means you'll place it somewhere and let it work for the next 10 years. Well, in this case, I have some bad news. Putting this money in the stock market is probably not the best idea if it's the only $1,000 you plan to invest for a while. Suppose you found a new online lending platform offering an annual return of 18%. Impressive, right? You decide to invest your $1,000 there. By the end of the year, with an 18% return, your $1,000 has turned into $1,180. This means you've made $180 over the year. However, let's put this into perspective. With those $180, you might afford a nice dinner and an investment book, or fill up your car's tank a few times. While 18% is a fantastic return percentage in terms of real-life impact, those $180 are just a small sum. So even if the percentage return looks attractive, it's always crucial to consider the actual amount this represents based on your initial investment. On the other hand, if you invest $100,000, it's a different story. But before you click off this video and yell that the title is a scam, let me tell you how you can proceed. There's actually something you can do that will allow you to earn more money and enable you to get rich from $1,000, or even less. Thus, you can invest more and increase your wealth. Because most people spend their lives utilizing a very small portion of their potential. So you have your $1,000 in hand. The first thing to do is to invest in yourself. It's the best investment you can make. Warren Buffett has often emphasized that the greatest investment we can make is in ourselves. This means learning new skills that can be useful to any business you work for now or in the future. Let's talk more concretely. Imagine for a moment, you're there, with your high school or college diploma in hand, spending your days scrolling through YouTube to learn. But at the end of the day, what professional skill have you really acquired? Now imagine that with a few days of effort and a small investment, you could transform yourself into a skilled professional, like a video editor. Let's delve deeper into this example of the video editor. Suppose you invest $300 in an online course. Once trained, imagine being able to land freelance gigs or even a job, paying you around $25 an hour. If you do the math, this could amount to up to $48,000 in a year. Put that in perspective with the initial investment of $300. For every dollar you've invested, you're getting back 160 times its value. That's astounding, right? When viewed from this angle, the investment is definitely worth it. Yet many tend to see investment solely as money put into an account or invested in stocks. But the real treasure is what you can achieve, what you can create with your skills. And remember, it doesn't matter if being a video editor or a phlebotomist doesn't speak to you. These are just examples to illustrate the power of self-investment. The real value of a person lies not only in what they currently know, but also in their ability to learn and adapt. In today's ever-changing world, it's more crucial than ever to stay skilled and informed. There is a multitude of in-demand skills in today's market. The beauty of the digital age is that many of these skills can be acquired without spending a fortune on formal education. Sometimes all you need is an internet connection and the willingness to learn. Platforms like YouTube, Coursera, Udemy, and many others offer thousands of courses on virtually any subject imaginable. Even without funds for paid training, a determined person can educate themselves online. Books, webinars, seminars, and online courses are all treasure troves of information. By arming yourself with additional skills, not only do you increase your chances of staying relevant and in demand in the professional world, but you also decrease the risks associated with economic uncertainties like the mass layoffs we're currently seeing. Charlie Munger put it well. Become a lifelong self-learner through voracious reading, cultivate curiosity, and strive to become a little wiser every day. Every day offers the opportunity to grow, learn, and improve your financial and personal situation. But learning doesn't stop with acquiring knowledge. It's about using that knowledge to solve problems, because a solution to a problem has value. And the size of the problem determines the value of the solution. Whether you're providing a service or you've created an innovative product, the value you bring is directly proportional to your income. By making money through your service or product, it's wise to live below your means, save, and invest what you save into educational opportunities that further increase your market value. Then, with those additional earnings, you can either invest in your business for growth, or once it's stable, diversify by investing in opportunities like the stock market. This brings us to our second option. Now, consider the second scenario. You start with $1,000, and you plan to regularly have more in the future to invest. And you are able to get there if you have followed what was said in the first part of this video, namely investing in oneself to acquire marketable skills. So, the second case. What you're looking for here is a source of passive income. That is, placing your $1,000 and any amount you plan to add each month, and letting this money work for you while you also continue to work and earn money on your own. Indeed, a powerful quote from Buffett confirms the importance of making your money work for you. If you don't find a way to make money while you sleep, you will work until you die. And who wants to work their whole life? Not many, I guess. The first and most common way to obtain a passive income source is through the stock market. But when I say stock market, I don't mean it in the way everyone imagines. For most people, the stock market is a place where you can invest in a large number of companies. For example, you can buy shares of companies like Tesla, IBM, or Google. When you buy shares of these companies or any other, you own a small part of the company. When they make money, you make money. If they lose money, you lose money as well. This occurs either through the fluctuation of the share price or through the payment of dividends. But this can be very problematic for many reasons. First of all, stock markets are by nature volatile. This means the price of a share can go up or down quickly in a very short time. There's also the risk of losing everything if these companies go bankrupt, which is not what we want. Let's take an example to illustrate further. It's a bit of an extreme example, but it helps you understand better. Come on, imagine you put all your funds into Tesla, but for some reason, the battery of all the latest models stops charging with no apparent solution. This prevents thousands of people from driving their cars and could potentially cause serious accidents. To make matters worse, there is no way to repair them other than by replacing the entire car. Unfortunately, Tesla cannot afford to replace all these cars, and moreover, they are facing a multitude of lawsuits from injured people and insurance companies. This leads to their bankruptcy. Now, you have your money in this company and, through no fault of your own, you lose everything you own. We want to multiply your $1,000, not lose it. And finally, you need a deep understanding of the company in which you invest, the sector in which it operates, and the overall economic dynamics. Without this knowledge, you might make decisions based on incomplete or incorrect information. A good rule of thumb to follow is that if you don't have the time to study the companies and learn to invest, it's better to avoid it entirely. Investing isn't just about picking the next trendy company. This is where index funds come into play. If you're just starting out with investing, the first smart step could be to explore general market index funds. These funds are known for their stability and reliability, making them an ideal choice for beginners. For example, investing in the S&P 500 gives you direct access to major U.S. companies. If the economic conditions are favorable in the U.S., the fund thrives. Conversely, during a recession, it is likely to incur losses. For those attracted to the technology sector, an interesting option would be to invest in a tech-focused fund, such as the Nasdaq Technology Index. It includes giants like Apple, Microsoft, and Google. Each fund has its own range of companies, so it's wise to do some research beforehand to choose the one that best matches your interests. By doing this, even if the market experiences fluctuations, your portfolio will continue to grow over time, thanks to the power of compounding. The trick here is consistency. The effect of compounding is such that it allows your money to grow exponentially. Take a simple example. If you invest $100 every month in a fund that generates an annual return of 5% after 10 years, you wouldn't have just invested $12,000, but your portfolio would be worth nearly $15,700, thanks to compound interest. Now imagine this with larger amounts as you develop and diversify your skills and income sources. If the idea of receiving dividends appeals to you, consider funds focused on this strategy. By investing in such funds, you'll have access to companies that faithfully reward their shareholders. To optimize your investment returns, it is wise to follow timeless advice. Regularly allocate, for example, 10 to 15% of your salary to your investments, thus avoiding unnecessary spending of these savings. As the saying goes, save first, spend later. Real estate is another exciting investment path, even if your initial budget is only $1,000. With the rise of the internet, real estate crowdfunding platforms, such as Fundrise or Realty Mogul, allow you to collaborate with other investors to finance real estate projects. While returns are often derived from rental income, it's essential to remember that these investments are not as liquid as stocks. However, before starting any investment journey, it's crucial to assess your financial situation. If you're in debt, particularly at high interest rates, prioritizing debt repayment is the best strategy. Paying off a loan at a high interest rate is akin to a guaranteed investment. You save on future interest and improve your long-term finances. Before diving in, think carefully and inform yourself. And if you want to learn more about the world of investing, check out the video now appearing on the screen, which gives you the basics of investing.